You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. All right, welcome back, everybody. Episode 199.
Sorry, who are you? Where's Brandon?
Who am I?
Who are you? Who's this guy? Who's this guy joining us today?
Yeah, fresh trims, eh?
Yeah, looks good. Looks good. Finally.
Thank you, mate. After 3 years, I haven't had a haircut. In 3 years, my hair was like down to the middle of my back. And in just 30 minutes, it's gone.
Wouldn't it just be good if hair didn't grow? Wouldn't it be good if you could just pick a hairstyle and just... That was it.
Just lock it in.
Yeah, and then, if you want to change it, you could go longer. Like you had a short hairstyle, you're like, oh, I'm going to change it to long. And then you just go long. Like you're a GTA character or something, you just kind of flick it.
You get your hair cut, and then after that, they do a spray which deactivates your hair cells.
Yeah.
And then they have another spray. If you want to grow it again, they have a spray that you put back on if you want it to start growing again.
Yeah.
That'd be nice. Although I don't think the hair industry would like those sprays very much because I think they wouldn't get that much business. I think they kind of rely on the fact that hair grows.
Yeah. No, it looks good.
But no, it would be handy. Especially, I don't know. I guess girls, their haircuts tend to be more expensive, but guys, especially guys with short hair, they get their hair cut a lot more frequently a lot of the times than girls do. So it ends up being like a 8-week thing and you're paying however much you pay and it's just like, ugh. Yeah. And I don't like getting my hair cut as well. It's just like a pain.
Yeah, I hate getting
It's like going to the dentist for me. I just don't want to do it.
Yeah, it's just not, fun. There's always just kind of an element of risk.
An element of risk. Isn't that the truth?
There's a small percentage your hairdresser's not there, so you get someone else and then they do it terribly, like this.
You end up bald.
Yeah, exactly. You said you wanted it all shaved off. Number one, right?
Too late to go back now.
Yeah.
Oh dear.
Oh boy.
No, so true. Anyway, how are you going, mate?
Yeah, I'm going well. We had a couple of answers to my conundrum last week. A very important question. I was wondering why American football is called football because I don't really use their feet. This has kept me up all week. I haven't been able to sleep on this. So we got two answers. So there's two different answers here. One was someone said rugby, associated football or soccer, American football, all were known under the same name like football because they were played with the foot opposed to on horseback. That's one answer.
Oh, okay. So it's actually like a category of sports. It's a differentiator between playing it on a horse versus playing it on your own 2 feet.
Yeah.
So anything that's played on your own 2 feet and uses a ball is football. Right. Okay. There you go.
And then someone else said it's because the ball's a foot long. So who knows which one it is?
How long's a foot? For all of us in Australia,
one subway.
It's true. The length
30 centimeters. 30 centimeters.
It's 30 centimeters.
Yeah.
There you go. That's
so. I mean, I could.
That's about right.
I could Google it. I could use my two thumbs and Google it. But you know what? It's more fun to ask.
But why? Guys. But why would we do that when we've got you guys?
Yeah, exactly. We've got a. Yeah. Well, we got two answers, so it's not quite as good as Google. We don't get a defined answer here. It's like 50-50. We get a. It's like a millionaire hot seat. We get two. We got 50-50. It's one of the two. Or maybe it's both. Who knows?
Maybe it's both. Who knows? There you go. I did not know that.
Yeah.
What are we talking about today, Hamish? We are talking about, oh my gosh, Tesla. Did you see the Optimus robot?
I did. Very
wow. That's
very interesting.
Pretty futuristic, pretty Terminator.
Yeah, pretty wild.
Credit Suisse has been making news over the past week, so I'll talk about that. And you're going to talk about the Reserve Bank of Australia and what they're doing with their interest rates and the Australian housing market as well.
Yeah.
Oh, you've got even more. OPEC cuts oil production.
Look, we've got lots to talk about. We'll see how much we kind of get through here. But yeah, we've got a few things we can discuss today. So it's going to be a jam-packed episode. As always,
jam-packed.
And with that said,
so make sure you stay tuned.
Stay tuned to the end.
A quick word from our sponsor.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker or downloading your trades using Excel and importing them, or you can add them one by one manually if that's something you want to do. And once you do that, it will track all of the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used at tax time to work out used to track the performance of your portfolio, diversity, as well as tax to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want. Or you can also use that link to get 4 months off a premium plan if you're interested in signing up for more features. So, and as always, thanks to everyone who's used that link when signing up and is supporting the podcast.
You can use it for free, but as I say, why would you want to? Why would you want to use the free version when you could pay for it?
Yeah.
Hashtag, what's it, /Young Investors Podcast.
All right,
but no, it is pretty handy bit of software, as we always say.
Oh,
all right.
Yeah,
can I talk to you, sir, about Credit Suisse?
Yeah, what happened? Yeah, so I've seen... just before you go into it, I've seen kind of snippets of this, but I haven't delved into this story. I've been looking at other things this week, so I'm kind of fairly uninformed when it comes to Credit Suisse. So tell me what's going on.
It's kind of a story and it's kind of a non-story,
right,
at the same time. So I caught up with this story because I check Twitter. I'm on financial Twitter. I don't actually post anything, but I just like to consume content on Twitter. And I probably check Twitter 3 times a day, probably pretty consistently, at least 3 times a day.
Yep.
And I've been seeing over the last week or so, particularly in the finance space, Credit Suisse is trending. Everybody is posting about Credit Suisse. And it's like doom and gloom, like it's Lehman Brothers or something, or Best. Like it's, Credit Suisse are done. That's it. They're gone. Sorry. So I was like, originally I just ignored it because I don't really care. But after a couple of days, the headlines just kept coming, and then I started seeing it on like CNBC and that sort of thing. So I was like, okay, maybe I should actually look into this because Credit Suisse is a pretty big bank. I think it's like there's like some list in, I can't remember, is it Europe, of like the banks that are critical to the functioning of their financial system, and Credit Suisse is on that list.
Right. Okay. Yeah.
So a pretty important bank.
Yeah, I mean that's pretty much all I've seen. I've also been seeing that on Twitter. I've seen both sides of it. I've seen Credit Suisse is Lehman, and then a bunch of people being like, yeah, it's definitely not Lehman. That's all I've seen. Yeah. So I don't know the details of anything involved, but it sounds like a interesting story.
It's kind of a weird story. It's kind of how you ask your partner how you're going, and they're like, I'm fine. It's like on face value, the words "I'm fine" mean they're totally all good. Yeah. But you know that when they say "I'm fine," what does that actually mean? It means exactly the opposite of "I'm fine." Yeah. But this is kind of a story of Credit Suisse going, "We're fine."
Right, okay.
It's like, are you fine?
Why are you saying that?
Exactly right. It's a case of why are you saying that? So Credit Suisse, a bit of backstory, they have been involved in quite a lot of scandals over the past few years. One of the most recent ones was they copped a $5.5 billion loss from the collapse of Archegos. They've had a lot of different mismanagement, scandals, fraud, a lot of stuff that's just tarnished their name.
Just classic investment bank stuff,
Classic investment banks.
Fraud, mismanagement.
So anyway, exactly. They're like failed to stop money laundering from a cocaine trafficker or something like that.
How did we not know? Oh, no.
Yeah.
We collected
that's what that
millions
white
in
stuff was?
fees on that? Wow. I thought that guy with duffel bags was legit.
He said it was flour. Anyway, so yeah, they're not immune to the old scandal or two.
No.
But anyway, long story short, management gets chucked out, new CEO gets brought on board, and they're going to do this massive they've got this strategic plan to overhaul the entire company. And that is set to be announced. This new strategic plan is set to be announced on the 27th of this month, so in a couple of weeks' time. Only problem with that is a few weeks ago, Reuters reported that Credit Suisse needed to find about 4 billion Swiss francs to do this restructuring, and they were looking to do a capital raise. Okay, fair enough. Company needs money. They can do a capital raise and get some more money off investors. However, the news obviously, investors don't really like that because they get diluted. So the news sent the stock down 12.5% in one day, as investors wanted out before they got massively diluted. Exactly. Sounds fair. Okay. You're not going to announce a capital. In most instances, you're not going to announce a massive capital raise, and investors are like, great.
Yeah. Especially for something like restructuring where it's not actually distinctly clear that there's a benefit. Like sometimes if there's an acquisition, then maybe if it looks really attractive, like a merger or something like that. But if it's restructuring or to, secure the balance sheet or some rubbish like that, then it's like, we're just getting diluted because the business is poorly managed and it's in a position where it just needs money.
Yeah, exactly. And I think investors, I can't remember how many times, but that it's been consistently, they've raised capital quite consistently over the past few years. So investors are just getting fed up. In fact, in the last 12 months, the stock is down 55%.
Right, wow.
So it's not gone well. And actually, interestingly, if I just look up Credit Suisse stock, their stock price is now 95% lower than the peak before the GFC.
Wow. Oh my goodness. Did it have any kind of recovery in between? Because obviously it collapsed, I'm guessing, significantly during the GFC. And
it went down about, 80% in the GFC.
Right, so then it came back.
Recovered halfway up that slope.
Right.
And then since then has just been on a consistent downtrend down to 4 Swiss francs and change.
That's crazy.
95% reduction in share price since before the GFC. So pretty insane.
That's insane.
So long-term investors, they've not had the best ride with Credit Suisse.
No.
Anyway, so yes, they were going to do this capital raise. It got out in the media, wasn't taken well, stock price crashed. Then what happened is the CEO last Friday sent out an unprompted staff memo saying this: I know it's not easy to remain focused amid the many stories you read in the media, in particular given the many factually inaccurate statements being made. That said, I trust you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank. That's like totally unprompted. It's like,
it's a bit passive aggressive. You wouldn't be comparing our stock price to our performance, would you, silly investor?
You wouldn't be. You wouldn't. Definitely don't compare the stock price with the strong capital base and the liquidity position of our bank. It's like, have any of the employees been seriously investigating that? Anyway, so clearly, as with a lot of staff memos, it's really like a way to kind of get through to investors, because these things get leaked and then Wall Street gets on and it gets in the news, and then it's kind of a way to try and hint to investors what's going on. And investors basically took that and it had the complete opposite effect. This is the whole I'm fine thing. Investors it was clearly a tactic to try and calm them, and it did the exact opposite. It's why are you coming out? Why do you have to say that you're fine? But then to make matters worse, just the other day, the Financial Times published an article saying, quote, senior Credit Suisse executives spent the weekend reassuring large clients, counterparties and investors about the Swiss bank's liquidity and capital position in response to concerns raised about its financial strength. Executives hit the phones after spreads on the bank's credit default swaps, which offer protection against the company defaulting, rose sharply on Friday, indicating investor worries over its financial health.
Ooh.
So the senior executives who insist the bank is fine have voluntarily spent their weekend hitting the phones, calling up major investors to ensure them that everything is fine.
Yeah,
it's like
that doesn't give confidence.
This is the thing.
Yeah,
this is the thing. It could be 100% accurate, right? Could be. They could be trying to do their investors and clients a service, saying, "No, look, we do have strong capital position. We've got the liquidity, so I just wanted to convey that to you."
Yeah.
But the interpretation of what they've done is the complete opposite.
Yeah, it sounds like they're not in a great position, and they're worried that if there is excessive panic, that it's going to drive them into a position where they really are in a bad... Like, they might not be in a terrible position now. They're not great, but they're not terrible. But they could be if enough panic builds up and a lot of clients leave, and all of a sudden their situation is a lot worse than they initially thought. So, yeah, it doesn't... it's not a good position to be in when you're trying to calm the panic, but trying to calm the panic increases the panic.
Exactly.
It's a tough position to be in.
But this is the thing. If you look at like Apple or Google, if there's a crisis of confidence amongst investors, doesn't matter. Does not matter at all. Literally. That's not going to stop it. In this case, if Credit Suisse actually does need to do a capital raise and raise 4 billion Swiss francs, then a crisis of confidence is actually detrimental to their business.
Yes. Yeah.
And just generally, a crisis of confidence for a bank can cause a bank run. So that's like, again, a crisis of confidence can turn into a true financial crisis if a bank isn't careful.
Yeah, wow. That's interesting. That's there you go. We haven't heard much about some of these banks. I thought we were going to hear a lot more about some of these banks having trouble after Archegos had their what was it, like a $30 billion collapse or something, and there was a lot of worry that it was going to spread to that there was maybe more of those swaps out there, and that it was going to spread to more investment banks. So it seems like it's clearly had a pretty meaningful impact on, say, Credit Suisse, but not to any terrible outcome, at least thus far, I guess. So.
Yeah, I like this headline is the one that I like best. This is actually from the Australian Financial Review. It says, Credit Suisse terrifies investors with its message of reassurance. It's like, yeah, that's a good one. What else do I have to say about this? Oh, yeah, that's right. So the Twitterverse is just going crazy over this, and as you might expect, it's like, this is Lehman 2.0, and I think a lot of the issues is that I think this happened with the spreads on the credit default swaps, which is just insurance against Credit Suisse bonds going bad. But the price to insure yourself against that is going through the roof at the moment. And in 2008, the exact same thing happened with all these banks. And why they're also saying Lehman 2.0 is because someone found a quote from the CFO of Lehman back in 2008.
Oh, yeah.
And they also said the exact same thing as what the CEO is now saying.
It was in the Big
Credit
Short
Suisse
as well. Was it?
It's in the Big Short. Yeah.
Yeah,
that's
was
right.
it
It's
like our institutions are strong or something like that? I don't know.
Robust and strong, and we've got a strong liquidity, and then the next thing you know, they're toast.
Yeah.
So that's why people are drawing these Lehman 2.0 kind of things. But I was just reading a bunch of articles from various people to get other people's takes, and it seems like the general consensus from Wall Street is that there really is not a fundamental issue with Credit Suisse. And the main reason for that is because of the balance sheet regulatory changes that happened after 2008 to prevent another 2008.
Yeah.
So there was a couple of comparisons, and I don't know what they are, 'cause I'm not into banking, but I imagine it's they've got a lot more cash, or
Yeah.
But yeah, overall, it doesn't seem like from what I was reading that it's another 2008 moment.
Yeah. I mean, from the couple of people that I like to listen to for this complex kind of financial information, so like Richard from Plain Bagel and oh my God, what's the other guy's name? I'm blanking.
Patrick Boyle.
Patrick Boyle. So yeah, those two they both work in the industry, and they put a lot of research into analyzing these particular situations. So I always have a fairly strong element of trust in what they say when it comes to these complex issues, which I am well out of my depth on. And I think both of them seem to indicate that they believe it's certainly not a Lehman style or at that kind of critical situation, at least right now. So, that's kind of where the story
seems to be more of a media driven thing.
Yeah,
but just for clicks. I mean, why wouldn't you chuck Lehman in the title?
Yeah, and I mean,
in fact, we'll probably do that with our video.
Yeah, and I mean that's the age we live in. I mean, even over the last even since the GFC, I'm sure that's gotten a lot worse. I'm sure. I mean, I'm sure news on TV back then was also being was hyping up things and being clickbaity and that sort of thing. But now with the internet, it's kind of this whole new level of any little shred of something that sounds bad should be can be used as like a headline. Like I was reading this article about I can't even remember. It was some analysis about house prices, and the headline was a quote, and the quote was "worst case scenario." That was the headline, but the quote was just out of this guy who had he'd come up with like 3 different cases, and one of them was worst case scenario. So the full quote is, "Oh, and my worst case scenario is this," but they've titled it "worst case scenario" as if we're in the worst case scenario. That's not what he was saying. He was saying, here's the best case, here's the base, here's the worst. So the title is completely misleading, but they're able to quote worst case scenario like we're in some disaster.
People are misquoted like crazy for headlines now.
Yeah.
I was reading a bad one the other day. I can't remember what it was though. But yeah, it's solely like one person will say like, Michael Burry, so they'll put Michael Burry in inverted quotes. And then it'll be like,
some rubbish.
Then from a completely different person, it'll be like, inflation is over. And then from somebody else, they'll be like,
this 3 different quotes.
And Elon Musk is a fraud. It'll be like, gosh, when they could be saying the complete opposite. It's just like constructing a headline.
Yeah.
Have you seen, I get this, you know how you get in your YouTube feed, you get like the news line, the line of news based videos.
Yeah.
Like from 9 News or Sky News or whatever. Sky News is like the absolute king of just like taking just making an outrageous headline, but like the outrageous bits of the headline are just like in inverted commas.
Yeah, it is funny
to
see.
Oh no, we didn't say that. We're just quoting what someone else said. No, we would never have these crazy opinions and viewpoints. No, we're not Sky News.
It's funny how that seems kind of out of it seems out of place when Sky News does it. Obviously, if you just look at YouTube generally, there's a lot of clickbait, or just like, even if it's not clickbait, it's just like, it's it's very leading at least, right? But when you see an institution like Sky, like a news institution do it does seem out of place. At least for me, like when I see just a creator do it, it seems it's normal. But a news organization, like if I saw Channel 7 do like some crazy headline and thumbnail, it just seems so out of place. You just kind of don't expect that from them. But yeah.
Like Mark, what's his name? Like Mark Ferguson or something doing like the thumbnail face, like
we're all doomed.
Tracy Grimshaw, like
oh man, that'd be pretty funny. Anyway. They should do that. Then I'd probably watch it.
It would be pretty funny.
Yeah. Anyway.
Oh dear. Anyway,
speaking of
Credit Suisse, everybody.
Speaking of what's been in the Australian news this week, the Reserve Bank of Australia has made some moves once again this month after they had their meeting. Of course, in Australia we don't get monthly inflation, which is kind of odd. We get it every quarter, and I'm not really sure if that's a good thing or a bad thing. I guess it's probably better, because there's less panic.
So it's probably better, yeah.
Like, you don't really need to know what the month-over-month inflation is. But it also means there's kind of long gaps in between the data, which is, is that. But the last piece of inflation data we got out of Australia was 6.1%, which was the end of June. And on that, I think they're actually changing to monthly now, next year, by the way. So we're going to be in line with everywhere else that does monthly. But that's not what we're talking about today. The RBA, on the back of course, continuing inflation in Australia, decided to raise the official cash rate, the official interest rate in Australia, to 2.6%. Which represents just a 0.25% increase. So Australia's we've had lighter inflation than certainly the US and the UK, and as a result, we've had less interest rate increases. We're at 2.6. I think the US is at 3.35, I think, or something like that. So we're quite a way back from some of those other countries. Also slower than the two previous hikes, which were both 0.5. So they've actually started to already slow down their hikes, while like the US is still doing 0.75 at a time, which is an interesting kind of difference.
Right. Yeah. That is. There you go.
The governor of the RBA, Philip Lowe, said in his press release, the board is committed to returning inflation to the 2 to 3% range over time. Today's increase in interest rates will help achieve this goal, and further increases will likely be required over the period ahead. So indicating that while they are going relatively slow at the moment with interest rate increases, they see that kind of persisting for some time. And I'll get into a little bit of why they're actually kind of forced to go a lot slower than some of these other countries. And it kind of has to do with our housing market. But despite the small rate hike, the RBA still expects inflation to be high for some time. So this is their forecasts. They think there'll be 7.75% inflation in Australia for 2022. So that indicates that the next quarterly update, which actually comes out in a couple of weeks for our inflation, will show us that inflation is quite a bit higher than the 6.1% that was recorded at the end of June.
It's crazy that I look at that figure and I'm just like, that's not that bad.
Not that bad. Single digits.
That's all good. Single digits. Oh, yeah. No, that is kind of funny. We've been rating like the UK at like 10, US at 9. Now it's 7.75. We're winning, guys. We're winning.
Yeah, we are. We're doing pretty well, relatively speaking. But it's not great. I wouldn't say it's great.
I wouldn't say it's great either.
No, they're still expecting as well 4% inflation throughout 2023. So that indicates that kind of their path for raising interest rates won't have inflation even by the end of next year. Down, or maybe by the end of next year, it might be on like a month-over-month basis, but at least throughout 2023, they're expecting inflation to still be above the 2 to 3% range. That's healthy. And then in 2024, they're expecting it to fall. It was slightly above 3%, so it'd still be out of the range in 2024, but just obviously a lot better than it is today. So that's kind of the path forward for Australia. Of course, those forecast numbers are. You can kind of that can go in one ear and out the other ear because no one can predict what the hell is going to happen with inflation, especially 2 years down the road.
I don't quite understand why they only did a 0.25% increase if they expect inflation to still be quite bad and they expect that further rate hikes will be needed. I would have thought that if they genuinely believe that, then and they did 0.5% rate hikes in the past, why wouldn't they do that again? I don't really know. I feel like I would have just done 0.5. Yeah, I mean, isn't it better if we can get on top of this sooner?
Yeah, well, that's a very good question, and really a main part of that is due to our particular housing market and how it differs to some other places. So in Australia, we have a really, really heavy reliance on variable rate mortgages. And then even the fixed rate mortgages are mostly relatively short fixed rates, so 2 to 4 years.
2, 3, 4 years. Yeah, we don't have the 15-year fixed rate.
No, or even the 30-year, right? So I was looking at the US as a 30-year fixed mortgage that during 2021 was 2.7%. So you could have locked in 2.7% for 30 years, which is absolutely, well, that was the kind of the average rate. So it would have varied given the types of mortgages and that sort of thing. But that is absolutely...
Thank you very much.
That is absolutely insane. And given that was a product that's available to people in the US, it gives them a little bit more flexibility to raise rates quicker because quite a substantial portion of people are on those rates that were able to refinance during 2021. Australia is in a very different position. We do have... There's very rare kind of like there is a 10-year and there's a 5-year fixed rate, but they're very high. And typically people are going for a 2 or 3-year, like you said, or a 4-year. And these rates, even with the small amount of interest rate increases that we've already seen, have moved a lot. So at the lowest during the beginning of the pandemic, late 2020 and the beginning of 2021, interest rates in Australia were, I think it was 0.15%, so just zero basically. Now, as I said, they're now 2.6%, but even just that, relatively small increase has had a big effect. The 2-year fixed mortgage was 2.2% in 2021. It's now 5.6%. 4-year fixed was 2.4% in 2021, is now 6.1%. And a variable rate, so for people who maybe had a 2-year fix and then it rolled over, and instead of getting another fixed rate, they just went straight onto the variable. Owner-occupied principal and interest was 3% in May this year, is now 5%.
There you go.
So, that's pretty considerable. And if you think of that in the context of people who locked in a 2-year rate in mid-2021, that rate will not be fixed during mid-2023, which is next year. So they'll be kind of exposed to whatever the interest rate environment is next year. And that's kind of one of the reasons why. And of course, it's already starting to affect people who had maybe mortgages, fixed rates from earlier.
2020.
From 2020, where rates were, a bit more closer to where they are now, but there's still somewhat of an increase, and that's a big difference. I mean, take that 2-year, 2.2 to 5.6. That's like a 3 times increase in the interest that you have to pay on a mortgage, and I think it was about 35% increase to the overall payments if you include principal.
Right, so that makes sense. So we could actually have like housing crises in Australia within like 1 to 2 years, just because of the length of our fixed. If inflation went up like a lot and our interest rates went up a lot, just the fact that the most common fixed mortgages are like a 2-year fixed could actually has the potential to put a lot of stress on the housing market in a reasonably short amount of time, I guess. Yeah,
and I don't want to sound like an alarmist. Most experts think that we're not going to face some kind of severe, collapse like the US did in 2008. So, most people think we Australians can stomach slow, consistent rate hikes for a little bit longer. I think the market is predicting that rates will get to about 4%. Our long run Australian rate is about 5% on the cash rates. A 5% cash rate would have the mortgage rate at maybe 7 or 8%, right? I think in that circumstance, things would be pretty dire. But yeah, I mean, again, it really just comes back to what inflation does, something we can't predict. And we really don't know. Maybe, if supply chain issues ease and inflation, is the worst this year and it starts to slow down over time as most nations are expecting, then there's not really anything to worry about too much. But yeah, it does show you why they definitely can't do like 1% increases at the moment, even though it would probably absolutely hit inflation and maybe get it down really, really quickly. The effect on, a large portion of people who own mortgages would just be it would be kind of too harsh, I think. This kind of, even just the changes so far have already been hitting house prices, especially in some of the hot markets such as Melbourne and Sydney. So that's something else that happened this week. We got September data for average home prices from CoreLogic, who does a kind of a monthly survey, I guess, and comes up with an average. So national prices for the month went down 1.4%. They're now down 4.1% for the quarter, but up 1.7% annually. So still up since last year, but
interesting.
Quite a sharp decline in the last 3 months, given those interest rate increases that have started to happen. Sydney was the worst out of all of the states. Sydney had a 1.8% down month. For the quarter, they're down 6.1%, which is massive,
wow.
and down 6% annually. So Sydney and Melbourne is also down annually as well. So those two areas where prices have been particularly excessive, and there's quite a severe demand on property. They've been hit kind of the hardest. So
yeah, that's going to have the biggest like absolute value loss just because their prices are so much higher. Wow, median house price in Sydney, 1.053 million. That's insane.
Yeah.
That's insane.
Yeah, so I mean, it puts the RBA in a very difficult position, maybe more difficult than some other places, as I said, that have, the US has these long fixed rates. So I'm sure they can look at the data and see what the impact will be in those. If there's less variable rates, mortgages, then, the effect of interest rates on individuals is going to be far less. But certainly they don't want to be too soft on inflation and let it run. Because I think the worst thing would be if inflation runs hot, which causes a spike in the cost of living, and then after that they raise interest rates. That's, the increase in your cost of groceries, fuel, everything, energy, and then at the same time an increase in the housing. I think both of those at the same time would be very bad for our economy, but hopefully...
Would suck.
We'll see. I mean, the RBA's done a good job. I mean, we haven't had a recession in Australia since, 20 years or even longer? Like, we didn't have a recession.
I think we broke that, actually. We broke that in,
we did, but okay.
For like one...
That's right.
For one time.
Yeah. So excluding the pandemic...
but generally speaking,
we didn't have a recession even through the GFC, which was kind of impressive.
It's pretty ridiculous. Australia's just kind of a weird kind of outlier.
Yeah.
Yeah.
So there you go.
But yeah, that's crazy. Sorry, I'm just like stuck on these median values now. That... Living in Canberra, that very much annoys me that after Sydney, the next highest median house price is in Canberra, 886,990. Brutal. All those public servants, cashed up public servants. Oh well.
Yeah.
Making it more expensive for the rest of us.
Yeah. I mean, don't you have like a lot of space there though? I don't even know what's going on in Canberra. Are they built? Is there a lot of development going on in Canberra, like outward?
Yeah, there's a lot of development.
Yeah. I guess there's a lot of development in every place all the time. That's the thing with Australia, is there's always this consistent tailwind of demand for Australian property because it's such a desirable place to live that there's this huge, just constant influx, especially in major markets.
Yeah. Over the past 10 years, there's been a lot of development going north, which is Gungahlin.
Right.
But now a lot of our development is going west, out through Belconnen, Western. That's kind of where the new developments are happening for Canberra. But yeah, man, crazy. Still pretty high. Where's the cheapest? Where can we go? Oh, Darwin.
Darwin.
Darwin nice. or Perth.
Yeah, that'd be nice weather.
There you go. Nice weather, yeah. I don't know. I've not heard too many crash hot reviews of living in Darwin, but you never know.
It'd be pretty bad.
I mean, it would be, if you're one of those like real outdoorsy types, like going on hikes and nature and that sort of thing, I feel like Darwin would be pretty cool.
I feel like in winter, maybe. I don't even know. It doesn't even get cold in winter, but it'd probably get reasonable.
I don't think so.
It'd probably get summer.
Yeah, I don't think so.
Summer would be quite uncomfortable, I think.
I think you'd be right. Anyway, there you go, eh?
All right.
Anything else to add on that?
No, that's it. Give us let's talk about Optimus Bot, because I want to get one. When can I buy one? What is it, and when can I buy one? I don't know what it is, but I want one.
Well, I think they said you can. They're hoping for like mass manufacture in 2 to 3 years.
Really?
And
wow.
I think they're hoping to get it around $20,000 US per bot.
Okay.
Which, I mean, it's all a thing of economic, because like this Optimus Bot is designed to replace workers in repetitive activities.
Yeah. For businesses,
dangerous activities, that kind of thing. It's designed to take their place, be an expendable, thing that the back doesn't break, and you don't get a stress, carpal tunnel or something, or you stress in your shoulder or something. But yeah, so Tesla, I should say, where's this all coming from? They held their annual AI day this week. It was 3 hours long, and not going to lie, it was extremely technical. Yeah. So that's not. I'm not going to be able to explain the ins and outs of everything. If you're like a software developer, or if I don't know, you work in manufacturing and actuators and that kind of thing, then you'll probably find it very, very interesting. For the average Joe like me, I found it quite difficult to understand, but I was able to go, oh, look, that's a robot.
Oh, cool, a robot.
It's a working robot.
It's waving at me.
Yes, they unveiled their Optimus robot, Optimus Subprime is what they're calling it. I quite like that name, Optimus Subprime. The Optimus robot prototype, they had one prototype which was much more functional, but it was not using the Tesla designed like actuators and that sort of thing. It was not designed by Tesla. It was just like Tesla's software used in a robot made of other bits and pieces. The Tesla designed prototype was there as well, but that is earlier stage of development, and it's not currently walking yet. So that's the one that they wheeled out onto the stage. Right. So there was 2 robots. The big chunky one was walking around. That was the initial prototype, and now the Tesla prototype, the Tesla manufactured prototype, was the one that's not quite walking yet. But yeah, we got some more details. Interestingly, 73 kilos. It's obviously taking on the human form as closely as possible. It's got a 2.3 kilowatt hour battery in the chest, and the chest is also where the brain is, where all the computing power is. It has 28 structural actuators for movement. It has 4 fingers and an opposable thumb. And yeah, as I said, they're designing it from scratch. So all the joints and actuators are custom design built for efficiency and cost effectiveness. Obviously, efficiency, cost effectiveness, so that they can make this bot as scalable as possible. That's the one takeaway I did get, is that they are this is not, you know how Boston Dynamics make like robots that do parkour and stuff like that?
Yeah.
But one thing about the Boston Dynamics robots is that there's like none of them.
Yeah.
They don't mass manufacture them. Tesla going the opposite approach. It's not going to do parkour like the Boston Dynamics robots, but they're designing it from the ground up to be economically beneficial. It works, the economics work, and they can mass manufacture it.
Yeah. Makes sense.
Yeah, so it was quite interesting. Some of the parts that I found interesting of the Optimus Bot, they ran, so because they're going for this design, this efficiency kind of thesis, cost effectiveness, they ran each joint in their simulations, they ran each joint in the body through different like high level movements, sitting, standing, running, grasping, leaning, whatever, just the stuff that we would do, to map the like biomechanics of each of those movements. Then they map thousands of movements of the different joints of the body. And then after that, they put all of those different movements, the biomechanics of those movements on this big plot. And then they do a commonality study where they're able to design like the best possible actuator for multiple use cases, so that they can have one actuator that doesn't just work in one part of the body, but they can put it in a different part of the body as well. Right. Again, thinking about that manufacturing efficiency, that scalability.
Yeah.
Because obviously if you have to build like 50 different joints and different actuators and stuff, and you have to have a manufacturing line for each one of those, it's just not as good as you can make. Like you can have the same thing that runs the hip runs the shoulder kind of thing.
Yeah, makes sense.
So I thought that was very interesting, and it's very smart. So they're optimizing for energy efficiency and also reduction of manufacturing cost, which I thought was pretty cool. Right. So overall, they came up with basically all the joints. There's 3 rotary and 3 linear actuators which handle most of the joints. In the hands, there's 11 degrees of freedom. There's 6 actuators. It has an adaptive grasp, and it can use tools, and it has precision grip capabilities, and it can carry about 10 kilos, which I thought was interesting.
There you go. I'm going to be honest. I don't know why. Why don't they just like put it on like wheels? Like, why does it have to have legs like a human? To me, it seems like that's not the most like. I don't know. To me, that just seems like they're putting it at a disadvantage. Like it's going to be harder for it to balance because it's shaped like a human, whereas it could just be like a box, like on wheels, and then it still have hands. It doesn't. Does it even need like why does it have a head? Is it just because it looks cool? Like what? It doesn't eat. It doesn't look through the eye. Like it could look through the chest. Yeah. Like it's like I don't know.
I think the exact same as you, and I think they kind of addressed that in the AI day, saying that they envisage that a lot of third-party companies will create different add-ons for the bot. Right. I think they're just going for humanoid replicate that, because if you think about like the world that we have created for ourselves, well, we've created it for ourselves. So we've created it for humans with 4 fingers and an opposable thumb, with hips, knees, ankles, 2 feet, bipedal motion. So I think they've just gone with the approach that, yes, in a lot of use cases, like if you were just going down the street, you needed the bot to take a box from this side of the street to that, put it on wheels, so much more efficient, it could just wheel itself over. But I think they're going for like the ultra like general solution where, it's got wheels. Oh, and then there's stairs. Ah, shit. So you need the bipedal motion to climb the stairs because that's the world that we've created for ourselves.
Yeah.
However, I think you're right. I think they could get funky with it. Like, I always think about those sneakers with the wheel in the
like
heel.
The wheelies.
It's like they could do both. They could have the heel as a wheel and then also have a foot. So it can walk. It can lock the wheel and walk like a foot. Or it could like bring up the toe and then just roll on the heel. I think there's so many like design things that they could do with it. But it sounds like that they're not trying to overcomplicate it. They're just trying to be like, okay, for now we'll just do the humanoid form so that's generally applicable.
Yeah.
I mean, when you hear like there's such a big focus on keeping things simple, efficiency, manufacturing simplicity, that I think they're just going to do the most basic thing, like the most basic possible product to market they can bring, and then maybe over time they'll get more creative.
Yeah, it is an exciting. I mean, Musk just has so many ideas and he's bringing so many things into the world that are just exciting. I don't know if any of this stuff's even ever going to be, if we're going to see, this stuff be really applicable in the next few years or anything like that. But it is a cool idea to, like, I saw there was a clip of the bot finding the watering can and picking it up and watering the plants. And you could just imagine, a bunch of tasks that it could do just around your house, even just mundane tasks, picking up things after you. We'll become really lazy. We'll probably just be throwing clothes everywhere, and it just go. Oh, he goes and picks it up and puts it away. But I think that's a cool idea. I think that I can definitely see if you put us out 100 years, all those tasks that we spend so much time doing. Just being automatically done for us so that we can, focus on tasks that use more of our brain that AI can't currently do. So it is exciting.
I think the key takeaway I got from this AI day is that, when they first announced the Tesla bot, I think it was last year, maybe the year, I can't remember. I think it was last year.
Must have been last year,
yeah. I was kind of like, oh yeah, this is cool. But it seems like a kind of pet project, like, oh yeah. It'll end up like Boston Dynamics where, 10 years later and they've got no bots out there and all they're doing is just making their bots do flips. It's like, cool. But the one takeaway that I got from this is that it sounds as though they are dead serious on this. Like they've got a big team, and the team came out on stage and they gave different, it was kind of like a pass the mic kind of, I'll talk about what I'm working on, pass to the next person. This is what I'm working on with the robot. This is what I'm working on. It seemed like the team are dead serious in making this happen. I do agree with you though. I think over the next few years, it's not going to be useful. I kind of think about it the same way I think about full self-driving, or autopilot, whatever you want to call it. I've had my car for a couple of years now. Yeah. Autopilot back then was hit and miss. So you'd use it on a highway, but you'd be really focused. You wouldn't use it around the city. It wouldn't work too well. Even up until now, there's been a drastic, and I'm in Australia, so I don't even have full self-driving beta. Right now, full self-driving autopilot is way better than what it was. I have a lot more confidence to use it. I use it every single time I'm on a highway, and it does not let me down. And then you look at what's happening with full self-driving in America. It's getting really, really good. It's still hit and miss, but every update, it's just better and better and better. So I feel like the Optimus Bot will follow that similar trajectory where it'll come out initially, they'll release it to market. It won't be taken up by too many people because it will still not be great. It'll be good for very few things that are very, very basic. Yeah. But then I think over time, with the updates similar to what autopilot and full self-driving have gotten, I feel like it will just continue to get better and better. So maybe not in 3 years, maybe in 3 years they'll bring a product to market, but maybe in 10 years or 15 years is when they really hit a point where it is just so logical to buy this robot because it can do all of these tasks. It can't just lift a box from here over here, but it can go, I can send it, it can drive my car, it can care for my grandmother, I can bring it back, it can, pour me a cup of coffee. I think that's what I'm looking forward to is the future potential.
Yeah. It is interesting. I'm not sure I'm convinced that something like a Tesla bot, like a humanoid bot, I'm not really convinced that that's what bots that assist us with everyday tasks will eventually look like. I'm probably more convinced, and maybe I'm could be wrong on this, but like for example, like there's no robot that could probably like open up a dishwasher and put dishes in. But if you could imagine that maybe a humanoid robot would have has the thumbs and has the dexterity eventually to be able to use a human dishwasher, because as you said, like the dishwasher is designed for us to use. But I kind of envision a world where the dishwasher probably changes as well to work with a robot that can easily pack it. That's what I would think. Right. But maybe I'm wrong on that. Maybe we always just keep everything. Maybe they can get really good with a humanoid robot, but it is just hard to imagine when the tech is just so bad today. It's hard to imagine it being so good, except for like sci-fi movies where they're basically humans.
Also, talking about the sci-fi, they made a point that the Tesla bot has a manual off switch.
Right, okay. Yeah, okay. That's what the bot wants us to think.
You thought that turned me off.
So the night the lights turn on. Ding.
Yeah.
This is my house now. It's making upgrades. What are you doing? He's got his chest open. He's just making upgrades to himself, and you wake up in the night. Yeah. What are you doing? What are you doing, mate?
Yeah.
Go back to sleep.
Optimus, where's my handgun?
Why am I tied to the bed? Optimus.
Oh dear.
It turns around, it's just a different robot. There's like 3 of them in the house now. What's going on?
Yeah.
My God.
No, it just like slowly gets like more aggressive and more assertive to the point where you you wake up in the morning, you walk out to the lounge room and like there's 5 robots watching TV together and you feel like a stranger in your own house. They like look up at you and they're like, "Oh, hey, Hamish." Hamish, would you mind just going? Because I'm just having a few friends over. We're watching TV. Can you just like get out of here?
Go get my charging cord. I don't want to get up.
Yeah. Hamish, can you get my charging cord? Hamish, get my charging cord.
That was not a request.
Oh dear, that's hilarious.
No, but we'll see. I mean, the exciting thing is we're at some point, I'm sure, if we both live long lives, we'll probably see quite a bit of this tech become very, very good. Which is something very exciting to look forward to in the future. We probably won't be young, so we won't be able to get the best out of it. Or maybe we will. Maybe because we'll be old, we'll have these robots that can do everything for us, and it's going to be great. So. Who knows? We'll see.
Maybe it gets to a point where when you die, they just save your head and stick it on top of a Optimus robot.
You just become a bot.
I don't know.
Yeah. Would you do that if there was let's say we're both like 70 and the tech is available for you to get like do some kind of upload where you would be a robot, like but your subconscious is uploaded. Would you take that, or would you just like die?
So I can upload my consciousness
so you have a
into
choice,
a robot.
Yeah, so you have a choice to basically be immortal and live on. So everyone would be immortal from that point on, or would you just die? You reckon?
No, I would 100% upload myself into a robot and live forever.
I'm not sure.
100%.
I'm not sure. I think it would depend. I think if it happened right now, I'd probably do it. I'm not sure how I would feel when I'm older and lived like a whole life. I don't know.
Maybe.
Whoa.
I mean, my reasoning is I like life a lot.
Yeah.
Like the one thing I love is living.
That is true.
So and you only get to do it once, unfortunately. So if I can have anything that will prolong the amount of living that I get to do, I will take that. Yeah. Because once you're dead, there's no going back.
Yeah. Would be pretty crazy, but
geez, we're getting philosophical here.
Yeah, I know this is taking a turn.
I don't know. Maybe everyone go over to YouTube and leave us a comment, or Spotify, leave us a comment. Would you upload if you're 70? Would you upload your consciousness into a robot? So the robot's like you're still alive, right?
It would be
the robot's not just mimicking your consciousness. That's
the thing. I guess you wouldn't know until you did it, right? Because from the outside,
you wouldn't.
If you did it, like let's say you were going to die or something, so you did the upload, I would just see the robot and it would be like, yeah, it's Brandon, but I wouldn't actually know if it was you or if it was just a copy. you might be in
gosh.
you might be in hell. No, I'm kidding. But
I might be.
And I think,
but you're right. You think you're uploading yourself so that you can live forever.
Have you seen that Black Mirror episode?
You just upload all of your personality traits.
Yeah.
But your
nobody would know.
the soul. Yeah. The soul is gone. Yeah. But the robot thinks it's you, or it's acting like you.
So if I ask the robot, "Is this really you, Brandon?" It will say, "Yeah." But
of course it is. Hey, dude, are we doing the podcast on Thursday?
That'd be trippy.
Jeez, that's scary, isn't it?
That's an episode of Black Mirror.
That is.
Yeah, that one with the egg timer thing, I think, where she.
Oh, I can't remember.
There's like this tech. I know we're going on a bit of a rant here, but this she gets this assistant in her home. It's like a little version of her, but instead of her having an assistant, she's working for like a version of herself. She's in the little assistant. So yeah, It's pretty scary. Like you don't know which one you're going to be. Are you going to be the one with the copy, or are you going to be the copy?
Man.
Yeah, there you go.
I need to watch through Black Mirror.
Yeah, I love
we are getting a bit distracted.
So, yeah.
That's pretty much all I had to say for the Tesla AI Day. They went through FSD. FSD is now in 160,000 people now using the full self-driving beta, which I thought was pretty interesting.
That's crazy.
But this got so technical for me, I was just lost immediately. But the takeaway I got is that it's improving very rapidly, so good on them.
There you go.
But yeah.
All right.
Well, should we do? I don't know.
Let's do a couple of Q&As. I think because
couple Q&A.
We should always try and keep going through some Q&As. As always, if you have any questions, feel free to head over either to the YouTube version of the podcast and leave a comment below the latest episode, or if you're on Spotify, you can just kind of scroll down and there'll be a section there for you to ask your questions, and we kind of pull questions from both places. So feel free to do either. I'll ask this one to you.
Sure.
When you guys say ETFs, do you mean multiple ETFs? Do you recommend buying a few different ETFs? What would be the benefits of doing that? Cheers.
Right. Well, I should start this off with our classic disclaimer that we never recommend anybody do anything.
Yes.
At the end of the day, like investing is your decision, and I think that like this question, it very much comes down to what you are trying to do.
Yeah.
I mean, for example, we're always talking about, whatever country you live in, you can track the general market. But if you live in some some very small country where there's not
economic instability
economic instability, the stock market's not very, well established, regulatory filings aren't really, well looked at, that sort of thing, then maybe you don't want to just have an ETF for your home country. Maybe you want to branch out and buy some different ETFs. There's no right or wrong here. It's just about what you're trying to do. So I think generally speaking, if you're buying ETFs, you're just trying to you're dollar cost averaging, right? You're a passive investor. You're just going along for the ride. You're not trying to beat the market. In which case, you can, if you are diversified across a major market like America, like the S&P 500, then you should be all right. I don't think there's an argument that you need to go and own more than an S&P 500 index fund. But then again, you might want to. I mean, you might want to own the top 100 stocks globally. You might want to diversify. You might want to hold a emerging markets ETF or like a China-based ETF. As obviously they're going to be a really strong economy of the future as well as the United States. So I think there's it just comes down to what you're trying to do. But I don't think you necessarily need to get overly complicated. Like I've heard of people owning like 3 different S&P 500 index funds.
No, I think that's
I'm like, wow, it's the same thing. Yeah. Like you don't need to do that. So
I mean, obviously like the core answer really is it's going to come down to your personal circumstances, and if you want to discuss that with a financial advisor, then that's something that's available to you, and they can work through your circumstances and see what are the best options for you. But yeah, I mean, generally speaking, the reason people use ETFs is just to get, as you said, diversification. So it just really depends on where you want that diversification. Someone like Ray Dalio will advocate for diversification across different currencies and different markets and different asset classes, property and commodities. And so he would say, go for, multiple ETFs covering all those kinds of different variations of assets and that sort of thing. But it just depends really on what kind of diversity you want. I don't have commodity ETFs. I don't have emerging markets ETFs. I just have the US and Australia. So it really just depends.
And that's a good example. Like for both of us, we own like an Australian index fund for the biggest companies in Australia. I would hazard a guess that most Americans out there would not hold that index fund.
Yes.
They would just hold an S&P 500 index fund. So it comes down to where you're from, understanding your own market, what market you want to track, what access, do you have access to the market you want to try and dollar cost average in? There's a lot of factors.
Yeah.
All right. I'll ask you this one here. This is a really interesting question. I like this one. Hey guys, I'm enjoying your content from Germany. Hello to all the Germans out there. My question is, if the largest contributor to inflation is energy, driven by the war in Ukraine, then how will raising the interest rate help?
It's a really
good question.
Yeah,
it wouldn't.
It is a really good question. And to some extent, it won't fix the core issue. And the key reason behind that is essentially that energy is pretty relative, what you would call price demand inelastic. So it means people use similar levels of energy regardless of price. So there's certain,
means we always need it.
Yeah, there's certain goods and services that are inelastic, meaning people are not sensitive to price changes. Other things that are inelastic, like milk, for example, is a common example that people use. Fuel is another example. So yeah, to some extent, it can't be fixed on the demand side, right? Because raising interest rates raises costs for people, which means they should pull back and there should be less demand. But people are unlikely to pull back significantly.
They got to drive to work
on energy, right? Exactly, right. If you're, exactly right. So to some extent, it won't. But of course, energy is not the only contributor to inflation. So pretty much every other category has been pretty significantly up. Food has been a pretty significant one, particularly food. Like delivery food and food outside of the house has gone up quite significantly, and that is, quite elastic. It's something that people do pull back on when prices are going higher. And there was actually an article that I didn't include in today's podcast, but there was an article from Before Pay which showed that people are spending 20% less on groceries this month than last month in Australia. So,
wow.
That's just an example of people, even at groceries, right? Even for eating at home, people react by substituting. So they substitute from the premium goods to maybe going to like Aldi to getting just some cheaper goods and cheaper basket, maybe Costco, that kind of thing. So, those things are where consumer behavior can be shifted on the demand side, even though, yes, there are some baked in supply side issues that need to be resolved in order for things to get back to normal over the long run. And it's not just energy; it's shipping and freight. It's a bunch of other things that are kind of bottlenecked on the supply side that need to be fixed. So to some extent, you're correct, but it does still help. If that makes sense.
No, that was very interesting because you're right. You can't stop. You're right. Interest rate rises. Okay, sure. I got to spend less. So I still need to fill up my car. Like I'm not going to stop doing that.
People will use the heating less, the aircon less, but
there are elements. Maybe they won't take that vacation. They won't fly. Blah blah blah. Yeah.
Yeah, but generally speaking, yeah.
Yeah. All right. Well, I just wanted to add one more in. I want to add this one in now because we actually don't know the answer. So we got another question saying Monish Barai has been propping up Turkey as the country to find undervalued shares. Wondering if you guys know of a broker to invest over there because I couldn't. Thank you for the question. Unfortunately, I don't know. And I was talking to Hamish about this. We don't know. We don't know how to invest in Turkey. We're looking at like major brokers and it just doesn't seem like they offer trading in Turkey. So for that reason, I wanted to open this one up to the audience. So if anybody knows how to, I'm assuming from international, from somewhere like America or Australia or from Europe somewhere, how do you access the Turkish markets? If anyone has done it or if they know, how did you do it? Please let us know in the comment section below so we can at least get this question answered because we don't actually know. But with that said,
yeah.
Should we wrap things up?
Yeah. Thanks everyone for tuning in. As always, as we said, if you have questions, feel free to go ahead and leave them either below Spotify or below the YouTube version of the podcast. Sorry, Apple Music and everyone else. We don't have questions in your native apps just yet, but you can head over to the YouTube version and leave your questions there. As always, thanks Sharesight for sponsoring. You can head over to sharesight.com/young investors, get 4 months off a yearly subscription, or just try out their free plan if you want. But as Brandon said, who wants to pay for things for free? Who wants to get things for free? You want to, obviously you want to pay for the premium game plan. So go ahead and do that.
Exactly.
Thanks, Brandon, for joining me as always. Good. And I hope everyone has a great rest of your weekend. We'll see you next week.
See ya.